So let's stay with the market. Our next guest says equities remain on downgrade watch for him, and the key will be whether this war heads into April. Joining me now is 314 Research co-founder Warren Pies. Warren, good to see April's coming fast. Obviously, it's next Wednesday, I guess. A week ago, you thought maybe you give it a week to see if we get de-escalation, the taco trade. So explain the thinking now.
Yeah, thank you for having me. I think we've, just like everybody, maybe we all learned the wrong lesson from last year, which is to wait and expect a capitulation and look for that off ramp in one of these kind of self-induced market sell-offs. But I think it's been prudent to wait and to let technicals guide you in this. But we are getting to the point where the rubber meets the road. I think I do think there are signs that this sell-off is starting to move into the second phase, which is where investors are seeing that this is not a short-lived conflict. You're seeing the back end of the crude curve start to reflect a longer time elevated crude oil prices, and you're seeing some cross-asset moves. You're seeing gold rally. You're seeing the 2-year yields drop in the face of oil rallying and the stock market falling today. That's the first, I think, warning sign that the market's going to start looking through the inflationary first early impacts of this into the recessionary consequences.
Yeah, that for sure. I saw you highlight that today, which was significant, that there was a bit of a switch from how this thing has traded for the past few weeks. At the same time, you said, let the technicals guide you. I mean, we keep waiting for this kind of, people say whether we need some kind of a real flush, some kind of comprehensive liquidation. You see a lot of stocks trading at their lows. It feels like it sometimes does when you have some of that climactic action, but maybe not everything lined up.
Yeah, I don't think it's there yet, to be honest. I wish I could say that. But what we're knowing the oil market like I do, like we're looking down the barrel at a very, very serious situation. If this lasts, like Rubio's comments to the G7 today was, hey, 2 to 4 more weeks. If this lasts 4 weeks, the S&P 500 is going into a bear market. Oil will be at $150 a barrel. There will be shortages. I'm not trying to be an alarmist, but this is just, you need to be sober-minded about what you're facing down. And I don't see sentiment reflecting that yet. We look at managed money, or we look at inverse ETF volume. It's a lake where you'd expect to be for a run-of-the-mill pullback and things like that. But I don't see the real fear and panic. In the levels that we're talking about, we moved into this consolidation range where we lost momentum back in February. That's when we initially downgraded stocks. And we basically said, okay, we want to see this range resolve. And that range was 65.38 on the downside, 6,900 on the upside. We broke through 65.38. We're waiting to get some good closes, a weekly close below that. So I think you should expect the momentum to accelerate to the downside from here based on technicals and sentiment to me. Yeah,
I mean, you've made the point when it comes to oil, it's sort of a cumulative effect to some degree. We have this daily shortfall. We're kind of burning through reserves and releases, and there's some I guess rationing going on. But how does that snowball if we go 2 to 4 weeks?
Yeah, so to me, and we talked about this a week ago. So every day, I would say, just as a good rough estimate, and this includes the SPR release, this includes the bypass pipeline to the Red Sea from the East-West pipeline. There's still a 10 million barrel a day hole in the market every day, and that's with all the best assumptions I can possibly make. If we roll that forward 1 month, that's 300 million barrels that we lost. We can already see it's gone on the water. The water excess inventories are gone. Now we're cutting into onshore excess inventories. As we roll into April, you're going to draw below what we would consider excess. And then you move into, even if we get a resolution to the war and we open the Strait of Hormuz back up, you still have time to get production and lost refinery capacity back online. This tells me that best case scenario is we're going to lose 600 million barrels of inventory out of global inventories. That's about an 8 billion barrel storage globally. That's a huge number. That's more than we've ever seen in any calendar year on record. So that's in 2 months. We're changing the shape of the oil market in real time in a short 2-month window. Never seen anything like it before.